Have you ever wondered what the connection is between Taylor Swift and the investment markets? Though September historically is quite a poor month for investing, a lot of the traders in the past would go away for the summer and come back and try to work out what to do with their portfolios, and usually there was a bit of misery came into it and they often started to sell. But this September has been a bumper month for investors. So if you look across world stock markets, up about 3.5% during the month, a lot of that driven by really strong US performance, up about 3.7%. Japan being one of the real big leaders in the market, so that's up over 12% during the month, just in the month of September. So a lot of positivity about what's happening in the Japanese economy, and some political changes taking place there at the moment that have been welcomed by the markets, including the expectation of the likely appointment of their first ever female Prime Minister. So we'll watch this space carefully. Investing in the bond market is always an important one, so we always talk about diversification, having a mix of shares, bonds, property, cash and so on. Bonds were reasonably flat so far during the month of September, and overall this year, gains in the bond market have been somewhat modest. If you look at some of the other areas of investing, gold is certainly something that we've been speaking about quite a lot, talking about quite a lot, and the yellow shiny stuff has been doing spectacularly well. If you were to look at the month of September, gold was up another 7%. That means it was up 16.5% in the quarter. And if you were lucky to buy in the early part of this year, 48%. So any of you out there that have been holding off on buying a piece of gold jewellery for the love of your life, you're going to find it's an awful lot more expensive to do so today. Other metals such as copper up about 27% so far. We mightn't invest in copper that much. It's a very important input into the world of manufacturing. The dollar is something we watch very, very carefully. Why is that? Because when we invest in assets such as US shares, when you look at what are those worth in euro terms today, what we've seen so far this year is a weak dollar, and that means that when we translate those returns back, they may not be as strong. The good news is during the month of September and really over the quarter, the third quarter overall, the dollar was reasonably flat. So having been very weak in the early part of the year, it's been a little bit better of late. Why have markets been doing so well? Well, one of the big stories has been the continued growth in all things to do with artificial intelligence, or AI. We're seeing much wider adoption of it. We're seeing companies announcing greater spending plans, and I've seen a figure that about 70% of US profits are in some way or other being connected back to the world of artificial intelligence. So, when we came into the summer, we were worried about things like global trade, geopolitical conflicts, the outlook for the economy, what was happening with jobs figures. All of these have been pretty good, and one of the really encouraging ones is inflation has been coming back under control. So we saw a rate cut in the United States, always an important one. It does boost the economy there, and again it forms a big part of world stock market. So that's the outlook for interest rates is something we watch very, very carefully. Expectations of further rate cuts across the rest of this year, that's something, if those come to pass, that should boost markets. The other interesting thing we saw on the back of a weaker dollar was we've seen emerging markets doing quite well. So emerging markets can include places like India, China, Taiwan and so on. They have been doing very well. A weaker dollar means that boosts the earnings and profitability in those countries as well. So a lot of Asian markets have been on a very, very strong run during the month of September and across the year to date. One of the other areas I mentioned earlier on, bonds being a little bit quieter during the month. We also invest in what are called corporate bonds. So this is a way of lending money to companies. And again, we look at a well-diversified portfolio across the world. That's been an important part of the investment universe for us. Delivered reasonably healthy returns year to date, about 4% up in the quarter. That's okay, nothing like as good as we're getting from the stock markets. But again, it leads to that diversification story that we talk about. So what we call corporate bonds, or credit as some people call it, important part of the mix, and again, as long as you do it in a diversified way. And this all goes back to the point of how we recommend that you invest. So you will have periods when we heard earlier in the year about US exceptionalism, and for much of last year as well. So US markets powering ahead. We've seen some what we call rotation. European markets doing very well this year. Germany and France, in spite of all of their political woes, doing quite well and delivering very healthy returns. So that's why we say you don't put all of your eggs in one basket. And the new Fairstone funds that we have launched that have approximately 55,000 different assets between shares and bonds and so on, spread right across the world. That's what we're trying to deliver with those solutions, is to give you an easy and straightforward way to access the wonderful and wide world of investing. And that inevitably will have its ups and downs along the way. And there's been plenty of periods over the month of September and during the summer when we've seen markets have a wobble, but thankfully they have picked up and delivered very, very healthy returns. So many different ways of investing, many different ways of getting returns. I'll just give you one, maybe just to finish off, that it came across last week. One area that we've seen a lot of funds investing in always looking for strong sources of income, and one of those is music royalties. So when you buy music royalties from famous artists, every time their music is played or downloaded, you get a share of that income. So it delivers a long-term flow of income. So we've seen that artists like Neil Young and Bruce Springsteen and others have sold back catalogues, and one artist who had sold some back catalogues was Taylor Swift, and only in the last week or so has announced a new album, and also that she has bought back quite a lot of her back catalogue. She's sitting on what's believed to be a wealth figure of about $2.1 billion, so she can certainly afford to invest in her own music, certainly at the moment. So lots going on in the markets. What we will say to you is, please get in touch. If you have invested with us already, it's always good to have a conversation about how it's going. If you are looking at, planning for the future, trying to get your money working for you, we would always say to you, well-diversified mix, take a long-term view, invest in quality, and that's certainly what you can do through Fairstone. So looking forward to talking to you again next month.